Ever wondered why a certain chunk of your hard-earned money disappears every month or year? No, it's not a magic trick, it's called taxes. Venture with us into the world of taxes, a concept that seems complex but is fundamentally quite simple. At its core, a tax is a mandatory financial charge imposed by a government organization on its citizens to fund various public expenditures. That sounds a bit technical, right? Let's break it down. Imagine you're part of a big family, and every month everyone chips in some money to pay for groceries, utilities, and maintenance. That's essentially how taxes work. We all live in this huge family called society, and we all chip in to ensure that it runs smoothly. But where exactly does your tax money go? Well, it's used to fund a multitude of services that we often take for granted. Think about the roads you drive on, the schools that educate our future generations, the hospitals that take care of us when we're sick, and even the parks where we enjoy sunny afternoons. These are all funded, at least in part, by taxes. Taxes also help the government to carry out projects that are beneficial to society as a whole. This might include building infrastructure, funding research and development, providing social security, and even helping to stabilize the economy during tough times. Taxes are not just about paying money to the government. It's about pooling our resources together to create a better, more prosperous society for everyone. It's about ensuring that everyone has access to basic amenities and opportunities. It's about creating a platform where everyone, regardless of their background, has a chance to succeed. So the next time you see that deduction on your paycheck, don't grimace. Instead, think about the roads that get you to work, the schools that are educating our children, the hospitals that are there for us in times of need. Remember that your contribution is helping to make all of this possible. So, in essence, taxes are not a curse, but a contribution you make for the betterment of society. Now that you know why we pay taxes, let's dive into the different types of taxes you might encounter. First off, we have income tax. This is the tax you pay on the money you earn. If you've ever received a paycheck, you've probably noticed a deduction for income tax. The government uses this tax to fund general public services, like infrastructure, education, and healthcare. And yes, everyone who earns an income, be it from a job, freelance work, or investments, is required to pay this tax. Next up is sales tax. This one is pretty straightforward. It's the additional cost you pay when you buy goods or services. Ever wondered why that pair of jeans or that cup of coffee costs a little more at the register than the price tag suggests? That's sales tax at work. It's used by local and state governments to fund public services within their jurisdictions. Then there's property tax. This is a tax on the value of real estate or other property you own. If you own a house, you're probably familiar with this one. Property taxes are usually paid annually or semi-annually and are used by local governments to fund services like public schools, libraries, and parks. Last but not least, we have corporate tax. This is the tax that businesses pay on their profits. It's a bit more complex than the others, as it involves various deductions and credits. However, the basic idea is that any profit a company makes is subject to tax. The revenue generated from corporate taxes goes into the national treasury and is used to fund federal programs and services. So there you have it: income tax, sales tax, property tax, and corporate tax. 4 different types of taxes that touch nearly every aspect of our lives. Each one serves a unique purpose and affects different groups of people in different ways. Understanding these different types of taxes can help you navigate the financial world with more confidence. You've probably heard the term tax brackets thrown around, but what is a tax bracket, and how does it determine the amount you pay? To understand tax brackets, let's first grasp the idea of progressive taxation. It's a system where the tax rate increases as the taxable income increases. The purpose of this system is to distribute the tax burden more evenly among taxpayers so that those with higher incomes pay a larger percentage of their income in taxes compared to those with lower incomes. Now let's get back to tax brackets. These are simply ranges of income with corresponding tax rates. In a progressive tax system, these brackets are organized from low to high. For example, in the first bracket, income up to a certain amount is taxed at a relatively low rate. As you earn more and your income rises into the next bracket, that portion of your income is taxed at a slightly higher rate, and so on, up the ladder of tax brackets. Here's a simple illustration. Let's say there are 3 tax brackets: 10% for income up to $20,000, 15% for income between $20,000 and $1 to $50,000, and 20% for income over $50,000. If you earn $35,000, you don't pay 15% on the entire amount. Instead, you'd pay 10% on the first $20,000 and then 15% on the remaining $15,000. This way, only the income that falls into each bracket is taxed at that bracket's rate, and that's how tax brackets work in a progressive tax system. It's a method designed to ensure that everyone pays their fair share based on their income. Remember, the purpose of tax brackets is not to punish success or discourage earning more. It's about fairness and proportionality in sharing the cost of running our society. So the higher your income, the higher your tax rate. That's the essence of a progressive tax system. Taxes can be confusing, and there's a lot of misinformation out there. Let's clear up some common tax misconceptions. Firstly, you might have heard that the rich pay less in taxes. While it's true that some wealthy individuals exploit loopholes, the general rule is that the more you earn, the more tax you pay. It's a progressive system where higher income brackets are taxed at higher rates. Secondly, the belief that I don't need to pay taxes if I don't make enough money is a common misconception. Everyone who earns an income has a tax obligation. However, the amount of tax you pay depends on your income level. If your earnings fall below a certain threshold, you may not owe any tax, but you still need to file a tax return. Knowledge is power, especially when it comes to taxes. The more you understand, the better you can manage your financial life.